Build your dreams, live rich, and leave rich.
So we've all heard the stories, right? The thrill of picking that one stock that just takes off. But let's be honest, we've also heard the other stories. Today, we're going to get real about why that exciting gamble often ends in disappointment. And more importantly, we're going to uncover a much smarter, less stressful way to build your wealth and actually keep your peace of mind. Here's what we're going to cover. First, we'll look at the reality of stock picking. Then, we'll dive into why our own brains can work against us. After that, we'll explore a powerful alternative, mutual funds, see how to use them with a clear purpose, and finally, how all of this leads to a life of wealth with real peace of mind. All right, let's dive right in. The dream of finding that one hidden gem, that stock that's going to skyrocket and change everything, I get it. It's a powerful idea. But the statistical reality, well, that tells a very, very different story.
Just look at this number, 25%. That's how many professional fund managers, people who do this for a living with entire teams and supercomputers, actually manage to beat the market average over a decade. So if the pros struggle this much, what does that mean for the rest of us? It means the odds are seriously stacked against us from the very beginning.
You know, the problem isn't that there's not enough information out there. I mean, the internet is just flooded with stock tips and expert advice. No, the real challenge is inside our own heads. It's about these hidden psychological traps that can turn a smart person into a very emotional and often unsuccessful trader. So let's talk about that. Let's look at what's really going on inside our brains when we trade, because understanding these powerful subconscious forces is really the first step to overcoming them and protecting our financial goals. First up, you've got overconfidence. This is that little voice in your head that whispers, "Hey, I found something that millions of other smart people have totally missed." It's the feeling that your couple of hours of research can somehow outsmart the entire market, and it almost always leads to taking on way, way too much risk. And then there's this beast, loss aversion. Psychologists have found that the pain of losing, say, 1,000 rupees, feels about twice as bad as the joy of gaining 1,000 rupees. This fear makes us do crazy things, like holding on to a losing stock forever, hoping it'll come back, while we sell our winners way too early just to lock in a tiny profit. It's totally irrational. Which, of course, brings us to the big one, herd mentality. You know it as FOMO, the fear of missing out. When a stock is going through the roof, everyone jumps in, buying high. And when the market gets a little shaky and the crowd gets scared, everyone rushes for the exits, selling low. It's the perfect recipe for buying high and selling low, the exact opposite of what you're supposed to do. So when you mix all these biases together, overconfidence, fear of loss, and following the crowd, direct stock trading, and especially things like options, becomes a really dangerous trap. It just eats up your time, spikes your stress levels, and for most people, it slowly but surely drains their wealth. Okay, so that sounds pretty bleak. But what if there was a better way? A path designed to completely bypass these emotional roller coasters and put you on a stable, disciplined road to building wealth? Well, there is. Let's talk about the mutual fund alternative. At its heart, a mutual fund is a really simple idea. Think of it like a group of people pooling their money together to hire a professional chef to cook for them. You're all chipping in to buy a whole bunch of different investments, stocks, bonds, you name it, all in one go. And when you put them side by side, you can really see how mutual funds solve the biggest problems of stock picking. Instead of needing a huge amount of money to diversify, you get it instantly. Instead of spending all your free time doing research, you have professionals managing it for you. It basically turns a very high-stress, time-consuming activity into a low-effort, disciplined strategy. This quote from the legendary John Bogle, the founder of Vanguard, just says it all. He said, "Don't look for the needle in the haystack, just buy the haystack." Stop wasting your energy trying to find that one magic stock. Instead, just own a tiny piece of the entire market. That's the real power here. So we get what mutual funds are, and we see why they're so effective. Now for the most important part. How do you actually make them work for you? How do you use them as tools to build the life you really want? This right here, this is the biggest mindset shift you can possibly make. Stop chasing the best fund. Stop asking, "What should I buy?" The most important question you can ever ask is, "When do I need this money?" Because the answer to that one question changes everything. And here's what that looks like in practice. If you have a long-term goal, something more than 5 years away, like retirement, you can use equity funds to aim for higher growth.
But for a short-term goal, like saving for a car down payment in 2 years, you need the stability of debt funds. It's just about using the right tool for the right job. Simple as that.
Now, the absolute best way to put this strategy into action is with a systematic investment plan, or SIP. This is a total game changer. You set it up once, and it automatically invests a fixed amount for you every month. This forces discipline, and it also means you naturally buy more when prices are low and less when they're high. And the best part? It takes your emotions completely out of the picture. No more guesswork. So, what's the end result of all this discipline? What's the real payoff? Well, it's not just about having a bigger number in your bank account. It's about building a financial life that is truly secure, stable, and, well, peaceful. Long-term success in investing is often less about making brilliant moves and more about just avoiding the big mistakes. And the biggest mistake of all is stopping your investments when the market is down. That's the number one wealth destroyer. Other traps? Chasing last year's hot fund, investing without a goal, and letting panic make your decisions. If you can just avoid these, you're already way ahead of the crowd. And this really shows you the long-term potential. Now, of course, past performance is no guarantee of the future, but historically, diversified equity funds have delivered pretty significant returns. That kind of growth, fueled by the magic of compounding, can build serious wealth over time, all while you're busy living your life, not glued to a stock ticker. So, here it is, your simple 5-step action plan. 1. Define your goals. 2. Match the right fund to that timeline. 3. Automate everything with an SIP. 4. Super important, protect your foundation with good insurance. And 5. Just check in on your plan once a year. That's it. This simple discipline can set you on a path to true financial freedom. Because at the end of the day, this whole thing isn't about getting rich quick. It's about getting wealthy, slowly, surely, and safely. The real prize isn't just a bigger balance. It's the freedom that comes from not worrying about money all the time. It's a strategy that protects your health, your wealth, and your peace. And that, right there, is the true definition of wealth. Living rich doesn't mean having flashy things. It means living a life free from financial stress. And leaving rich isn't just about passing on money. It's about creating a lasting, secure legacy for the people you love. So I'll leave you with this question. You now have the roadmap. You have the tools. So what is the very first goal, big or small, that you're going to start planning for today? Because taking that first step is the only thing that matters.